Good morning and welcome to NYFP. The 2013 Paris Europlace Financial Forum is taking place here at the New York Stock Exchange. And right now I am joined by Patrick Legland, who's the Global Head of Research at Société Générale. Good morning. Thanks for joining me today.
Good morning. Thank you for inviting me.
Well, it is a busy day here for the forum. There are over 300 delegates that are participating in this forum today. And the theme is post-crisis growth and investment opportunities in the Eurozone. And I also understand you did participate in a roundtable this morning about conditions for growth. So where do you see the opportunities right now?
Okay, you know, what is interesting is that in Europe, government made a lot of efforts to reduce budget deficit, which obviously is very good, but you see debt which is not reducing. The answer to this is growth. Then how would it be possible to have more growth? Certainly, to address the issue of 10 years interest rates in Europe, which are still significantly above nominal growth rate, GDP, and mostly this is an issue. And one option might be banking union, which would allow rates to go down on one side, and on the other side, the ECB stated a few weeks ago by Mr. Draghi that maybe they would be considering some measures to try to support growth. This obviously would be needed.
And Patrick, many of the industrialized economies around the globe are boosting their monetary policy, and we are seeing that played out and its effect being felt in terms of the equity markets. But given that we have seen Italy re-elect its president and we had the Cyprus bailout since we last spoke, what are your concerns going forward regarding Eurozone growth?
You know, once again, the main concern is certainly growth, because what we see is that virtually debt is not reduced. Virtually debt continues to slightly increase virtually year after year. And on the side, we see a lot of corporates would be quite willing to make some investments, either acquisition or organic growth. They have massively deleveraged, but what they need is confidence. And they will have confidence if they see that European authorities try really to support growth far more than maybe what is done now.
And Patrick, last but not least, before we wrap it up, here in the U.S. we are paying attention to earnings, and earnings reports give us a better understanding of what happened in the previous quarter and where companies see themselves going for the upcoming quarters as well as the rest of the year. But a lot of the big companies, including financial as well as consumer discretionary and even technology companies, have cited concerns regarding Eurozone growth. But in terms of the outlook going forward, what are you paying attention to?
You know, frankly, outlook, we remain extremely careful on growth, as I mentioned, which obviously is a main point. We remain also concerned about interest rates in certain countries. On the positive side, the collapse we have had in the last few months in commodities will be very, very good for operating margin. And last but not least, competitiveness. You know, honestly, competitiveness in Europe right now is maybe raising some question marks in certain countries, and this obviously impacts pricing powers. And when you take all this into account, we are quite careful on earnings for European companies for the next few quarters.
Okay, Patrick, well, thank you so much for joining me on this Monday morning, and good luck with the rest of the Financial Forum today.
Thank you very much for inviting me. Thank you.